Welcome to the weekly swing low. It's February 23rd, 2025, and the broader markets appear to be in daily cycle decline. The big question is it also a weekly cycle decline? We're going to go through our broader market tickers as we always do. We'll start with SPY, SPY. So we're looking at the daily chart here. So it looks like Wednesday, February 19th was the top. By that is the candle that marks the high. We made a new all-time high. So on for SPY, that was 613.23, and the low for that candle was 609.56. Now we actually didn't close the next day below that low. We actually had a little red hammer. You can see here I'm highlighting. But then Friday, we got a decisive close below that 609 level and even below the low that hammer made on Thursday. Now, of course, the catch is this daily cycle decline could end very quickly and we get a violent recovery sooner than one would imagine. So that's the catch. It's already, Friday was already day 27. But man, look at the size of this candle. Now, what does that mean for the weekly cycle? If you look at the daily, it looks pretty clear here that there's a gap here. Look at this gap. We had talked about this weeks ago, right? When price had this really nice big rally, left this gap behind, and then we had this gap down, and it's like, oh, maybe we're going to fill this gap here, and we didn't, right? We kind of like teased it. We didn't even get to the upper boundary of that gap. And then we made another higher low above it. Now this higher low is under risk, right? So this low here at 598.51 is your next line in the sand. If we get a close below that, then it looks very likely that we're coming down to test the upper boundary of this gap, which is 589, and then probably fill it completely. That gets us down to 584. Where would that put us? What does that mean for the weekly cycle? So for the weekly cycle, we just completed week 5. And here's the pattern for the weekly cycle. I hope as you're watching these videos, you're starting to understand, you're starting to see these patterns like clockwork. So we made a higher high. That's the high that we got on Wednesday. And then the candle went red because we had those two big down days. But we didn't make a lower low below the low. So to be clear, that's that 598.51 level. Notice going back to the daily chart, this level here that kind of stands out, really it's like this whole cluster here, is the low from this weekly candle here. All that to say, we ran out of time to make that lower low. So again, this pattern is a bearish outside candle. And so what we would expect is that we're going to get a compound bearish outside candle. So we'll finish the job next week. So we would expect next week's candle to be something like this. The catch is you could also end up with an upper wick or lower wick, right? That we get a rally later in the week to kind of erase that decline. But you would expect we make a low below this low, but not just that low, but we also break below this low so that these two candles become a bearish outside candle of these two. And you think about that gap fill on the daily chart, it all comes together. That's the multiple time frame analysis. If we get that gap fill, that definitely gives us this compound bearish outside candle. And most importantly, we zoom out to the monthly chart, just not to sound like a broken record, we are really getting long in the tooth for this rally off of the 2022 bear market low. We're at month 27 at this point. So you would expect that we're going to get 28, excuse me, we're at month 28. Wow. So you expect at some point we're going to get either a retrace of this big long rally or at the very least consolidation. So this rally was 272 points. So a 50% retracement of that would be something like 135. So that gets us to, I'm not saying that's our base case by any means, but a not crazy decline. Wow, that gets us down into the 480s. That would be a 50% retracement of this move. Now, this pretty ugly bear market wasn't even a 50% retracement. I mean, especially you think about, so what is that? That's 250, 250. So, and what did we get down to? Oh, We actually got really close to a 50% retracement, like in this decline here. But this was a particularly nasty bear market decline that lasted the whole year. That doesn't mean that's what we would expect for this, the retrace of this whole thing. But this kind of gives you a sense. I mean, that would be a 22% move down. But at some point, again, best case scenario, you're going to get multi-month consolidation. So I'd say be careful here, just big picture as well. And that would be like if we're going to get a left translated weekly cycle. So to be clear, the implication could be that this is your weekly cycle high here on week 5. And so we get a left translated weekly cycle. Remember, previous weekly cycle rallied 17 weeks. The one before that, 13. The one before that, 22. So what if this one stopped what if this, like, the rally is over after 5 weeks? That means we could easily get a 10-week decline, right? Like, to give us, let's say, a 15-week cycle. Could be some nasty stuff, but we're not here to make predictions. We're here to watch the price action and react based on what we're seeing. And so we definitely want to be mindful if we're seeing a scenario like that play out, because that's the kind of conditions where, some kind of short could work, but you have to be very tactical about it. So let's look at the rest of the indices. What about QQQ? So QQQ had been leading to the upside. It made that higher high. So it made a new all-time high sooner, but it suffers the same fate, right? And so very tactically, actually, to go back to SPY, for your bullish case, I would like zoom in to the 15-minute chart. So this is your first 15-minute candle on Friday. It was a little bit of a gap down from where we closed. And then we just kind of made lower lows, consolidated here in this range for a little bit, tried to break out. And notice this range here kind of corresponds to this range here where we had a little trouble. So we kind of or I should say, this range here corresponds to the holding these lows here. This looked kind of like a promising rally. This is like going into right after lunch, and then the bottom just kind of falls out, right? And we make a little lower low, make another a lower high, another lower low, a little bit more consolidation. So this is how we close the day out. So tactically speaking, this has all the makings of a bear flag. You really got to cross above this candle's high here, which is 602. So unless this thing can make a move above 602, I would expect we're going to get lower lows. And what I would say tactically, if this bear flag breaks down, we probably break above 601 first. So if we're going to get a breakdown here, I would expect a little rally up and then a flush to new lows. So if you wanted to play a short, I would wait for that false breakout, which is going to represent as a swing high on some time frame. So that's QQQ, or that's SPY. It's probably going to be very similar action, right? QQQ, same thing, close with a little bit of a bear flag. So for QQQ, that level down, so we expect a breakdown below 521.95, so call it 522. And then from there, you'd expect we actually also break down below this low here at 511 to make a bearish outside candle. Of course, this thing could reverse at any point, so you want to be watching for swing low on lower time frames. So that's the QQQ, and again, same kind of fate on the higher time frame. It's been a long rally so far, so we want to be cautious. The QQQ to SPY ratio, we talked about this being a little bit of a hidden indicator underneath, and you can see it topped out on it actually topped out on Tuesday. So the broader market had its swing high on Wednesday, but this ratio topped out on Wednesday, a little bit of like an early warning sign. So that's your high, and then we get a swing high the next day, and then we get, our big down day on Friday. And this is also showing, the same kind of pattern on the weekly chart, like on the pace to make a bearish outside candle on the weekly. This is just telling you QQQ is now underperforming SPY, which is just indicative of a pullback happening in general, people moving away from risk. DIA, same kind of idea. So for DIA, we see it actually already made a lower low on the weekly, and it actually made its high back on the last week of January. So it did not make a new all-time high. I said a different way, right? QQQ and SPY made a new all-time high in the last week. This thing made its last all-time high back at the end of January. And so the low for this, the swing high on the weekly, is below 439.88. So we have to cross above that 439.88 to have any sense of potential upside. But the indication here is that we're already in weekly cycle decline. So same this is the same count as the other indices. It's week 5. But for this one, the top happened on week 2. So an extremely left translated weekly cycle for Dow. So if one were inclined to go short, this might be the vehicle to do it. And we can see that in the ratio chart. Yeah, I mean, wow, look at this ratio chart, the Dow to SPY. I mean, look at that weekly cycle decline. For a QQQ to SPY ratio, it just started its weekly cycle. It hasn't even made a lower low yet. But for the Dow to SPY ratio, it's been making lower lows for the last 3 weeks, and it's about to break down below this low. Yikes! If anything, I mean, this is ugly, but at least it's very clear, right? And look at the Dow on the monthly. This is an important level to pay attention to. We've been inside this range. Look at these three. Look at this candle from November of 2024, and then this candle for December, January, and now the February candle, all inside this gigantic range, with a high of 449 and a low at 450, all the way at 415. We're up here at 434. So that tells you we could make our way all the way down here, and this is just consolidation within a larger range. Again, to that point, the long-term cycle high doesn't have to be a really nasty top. It could just be some really frustrating sideways action for several months. So that's the Dow DIA. Let's move on to IWM. Oh man, so similar to the Dow, the IWM did not go on to make a new all-time high, but this is even worse in terms of underperforming. So the IWM made its last all-time high back in November, and it's just been down only since. And for IWM, the most recent swing high happened with a close below 220.67. So that becomes your line in the sand. Have to cross above that for any kind of meaningful rally to the upside. And on the daily chart, oof. I mean, on the day, let's look at the lowest time, like lower time frames. So you look at a 15-minute chart. Your first mission is to get above 218.86. So call it in the 219 area. That would get you above this cluster of highs that's acting as a lower high right now for any kind of potential short squeeze is what I think about it. The way I think about it at this point, a short squeeze. And the IWM to QQQ ratio, no surprise, we are literally on the cusp of making new all-time lows. So lows not seen since the 2000s. Wait, let me just double check that. I think we're actually already below. We're at, yeah. What am I saying? Just to be crystal clear, we are at all-time lows. Now, the catch to this is that at some point this thing's gonna snap back like a rubber band. The thing is, no need to do anything until we have some kind of sign that that's happening. But look at that. That's almost like the makings of a massive false breakdown. Let's look at it on a 12 1 year candles. Oh my goodness, look at that thing. It's just been down only for a really long period, just making lower lows every year basically. So this is only going to be a big ratio to watch when this thing turns around. Even for a rally that lasts a few months, you can make a lot of money. You don't have to stay in it. All right, let's move on to semis. So we've talked about this, how this thing is going to explode at some point on the monthly. Right now, it's still just consolidation. We've got a little green candle, but look at this upper wick. Right now, this is all just noise. This is all just a gigantic, ugly, choppy range. But on the daily, it's doing the same thing as the other things. The catch here is this is pretty early in the daily cycle. So SPY, QQQ, like SPY, for example, is on day 20. The top came on day 25. For this one, I think this is like day 13 or something like this, right? Day 17. So not super early, but this is so the daily swing high comes below 254.92. So any kind of short squeeze really has to close above that 254.92 to give you any sense that we're going to get some meaningful upside. On the weekly, kind of similar to the monthly, not really going anywhere. Weekly is the same setup as SPY and QQQ, set up for a compound bearish outside candle. So to be clear, we would expect the candle next week to look something like this. So that would be going below 244.54. That's below the low of this candle, and most likely even below the low of this candle, so that these two candles become an outside bearish candle of this candle. That's the real. That's the sort of the big bear case. So that's SMH. The ratio of SMH to SPY, same as the other ones. We just made a daily cycle high, what it appears to be at least, on Friday. Or Thursday is the daily cycle high, the 20th. And you can see on the weekly, have not made a lower low yet, but look at this ugly hanging man candle. Expectation is a bearish outside candle, a compound bearish outside candle, so some continuation. So downside for semis next week is the expectation. All right, let's move on to Dixie. So Dixie is in daily cycle decline, as we've talked about, but it's day 19, so it's getting late. Right now, it was just an inside day. Friday was, and so you really need to see a breakdown below 106.33 to get anything kind of going. On the weekly, it is week 21, so getting later in the weekly cycle. So not exactly the time to be chasing downside, I would say, in my opinion. If we look at the 10-year, very similar position. So week 21, in this case, not really showing any signs of bottoming on the daily. If anything, it's hugging this potential support zone. So look out below if we get a close below, call it 4.39, something like that. All right, so that's oil. Not much to talk about here. Still kind of chopping around. We talked about how this is a gigantic range, so we expect it to make a move closer to 66, and that, look at this upper wick, these upper wicks the last two weeklies. Nothing much to see here. I mean, look at the Friday candle. This pattern is just pretty unmistakable. You get these tiny little days of upside, and then boom, you get slammed to the downside. So that's oil. TLT moving inverse to bonds, or to rates, I should say. And so the big question for this one was, is this a fresh weekly cycle here? And it's looking more and more like it might be, right? That 1, 2, 3, 4, 5. So instead of this being week 11 of a declining cycle, this is probably actually week 5. We talked about how this was such an important higher low. Now we have another higher low here to hold this structure together. So this is starting to move in the bullish favor, which would suggest lower, like that the weekly cycle continues to decline for rates, which, as we just said, doesn't really show a signs of bottoming just yet. So TLT is looking good here. You can watch 88.82 as your low that you want it to hold, or at least that area, I should say. All right, let's talk quickly about Bitcoin and Ether. So not to be a broken record here, but this is nothing but consolidation on the weekly. I mean, these are very ugly candles. I'm not playing in this. I'm just waiting for this thing to resolve. This right now looks like a bear flag, a breakdown below, what is that level? Call it like 93.5, essentially. We talked about how important, like, these big wicks tend to get revisited, and right now 93.5 is the only thing holding it back from making a lower low below that, which is maybe healthy, maybe what the market needs. For ETH, that lower low comes below 25.19. That, if we get below that, then we probably do revisit this wick down to 21.50, and then we may not be able to hold 2,000 in that case, to be honest. So that's crypto. But on the promising side, look at this. We have a weekly candle that's made a high. So staying above that, call it 2,500 in that area, actually pretty promising. So that's crypto. And finally, we'll close out with gold and silver. So gold hasn't made a proper daily cycle decline. I mean, maybe this is essentially what we're going to get, but this thing just won't pull back in earnest. That said, it's on week 7 of the weekly cycle, so it's not like it's super late. There's no reason this thing can't continue to rally more. But at this point, it clearly wants to take a breather. It needs to. And so this would definitely be a little bit of a dangerous chase. I still think we have many months of upside in terms of the 8-year cycle. Just I don't know that we're going to just continue to rally relentlessly on this weekly cycle like that. And for silver, the weekly picture looks much uglier. Like, look at these weekly candles, these just nasty wicks. And on the daily, we actually closed as a pretty swing high by closing below 32.63, which is actually all still inside the range of this big candle that marks the swing high. So if anything, it's really a close below that low that we have to worry about. So like below, call it 32.08. So call it below 32. That means we're now falling outside of this range. So all of this has just been price discovery within this just like ugly day where people just kind of ran away. But the bottom didn't fall out, right? Like, because buyers came in right here. So this is all just a range in my mind. And the top of that range is, of course, 33.39. So that's silver. And then platinum is doing a similar thing to gold. Well, platinum just doesn't have the same kind of support that gold does, which is helpful telling, right? So platinum made a swing high by closing below 1,030. That happened back on February 13th. So that's a telltale sign. Like, so watch for that. That might be leading. And GDX, also important to note, closed as a weekly swing high. So it's week 7. It's looking like, so week 6 is going to be a swing high based on this close. So it closed below 41. So look for a move back above 41 to turn this into a false breakdown to be bullish. Otherwise, this actually might be telling you where gold is headed, right? And the swing high for this on the daily, wow, this is a big, ugly, bearish outside candle that happened back on February 14th, so back on Valentine's Day. So this is all consolidation inside this candle. That's good. That's important to know. So the low in this candle is at 41 level. So you really want to watch. That really becomes your line in the sand here to the upside. And to the downside, this looks like a tiny gap that's unfilled. Yep. And this is a bigger gap that's unfilled. So look out below on those. Not to say we have to get there, but as the downtrend continues, if this plays out, if we get some continuation, you want to be watching those levels. And finally, for natural gas, it looks like we are on day 15 of a new daily cycle. And on the weekly, I don't know, like maybe this was just a relatively mild weekly cycle decline and this is a new one. I mean, it's starting to look like that's the case. And so for natural gas, you really want to just stay above this low here. That would be my risk point. So that's 4.14 to the downside in terms of where you place your stop in that neighborhood. All right, that's the update for this week. Thanks for watching.